Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on Friday, October 11th, minutes after the market closed, and AMC closed at a price of $4.17, being down about 0.5% on the day, which is about 2 cents. But the after hours trading session is currently going on, and it looks like AMC is up by about a penny. So it will be interesting to see how that ends up. But for the daily candles, the daily close, I wanted to do some analysis for us because I do think it is quite possible that AMC put in a bottom at $4.03, which was the low from yesterday on October 10th. And so, I just wanted to go over that, but I also did want to caution that it could still be heading lower. And the reason why I say that is, because there is still a gap to the downside, which I will go over in just a minute. But another reason here, just looking at the time frame here in the picture, is if I do draw a downtrending channel going from this high that was hit on September 9th, based on the closes of these candles, we can see that we have been trading in this downtrending channel. And while we did get this nice bounce on Thursday, we are still in that channel. We have not broken out yet. So we could very well be seeing a top put in today in a reversal and a continuation down next week. So do be cautious of that. But, I do think that there is a good amount of hope here that we may have put in this bottom. And so part of the reason for that is that we did get this bullish engulfing candle on Thursday, going up almost 3% on the day and completely engulfing all of the trading that occurred on Wednesday, October 9th. So that does look pretty good. Although with the candle that we saw today for Friday, it does look like an inverted hammer or a gravestone doji, which is, effectively the reverse of a dragonfly doji. Big wick to the top side and an open and close right around the same level. That does suggest that buyers are not able to push this higher. Sellers are keeping the price down. So we could be seeing a reversal next week. But the thing that stands out to me about this low that we saw on Thursday is, we got one close down here below this yellow line at $4.10, which I think is a very important level, very good to be paying attention to our closes relative to that price next week. And so we got one close below that level, and that could be suggesting that it's breaking down. But the low from the 9th on Wednesday was $4.04. So that was the low for the day that we broke that line. And a confirmation of this breakdown would be getting a secondary close lower than that day's low at $4.04. And we did not get that on Thursday. We saw an open lower, but then a close not only higher, but above that line of $4.10. So this could be a bottoming signal. So I think that looks really good. So I would look for, again, like I said, closes below 410. That is not going to be looking very good, especially if we get a close below 404 and especially 403. If we're getting closes below these lows, that does mean that it is likely to go lower, that this downtrend that I just pointed out is likely to continue going down. So keep that in mind. And so for me, what I have been doing, I have been pretty cautious about, buying any dips. In all honesty, I have not been buying these dips because what I have seen from them is, like this dip that we saw on September 25th, we saw a close at a price of 438, having hit a low on the day of 436. And, 436, 438, those are two levels below this 786 line that I have drawn here at 441. So, we were closing below that level, just like we closed below this level. And so I felt like, any bounce that we saw we were initially closing below a technical level, so we might be seeing a continuation down. Then following that, we got these big wicks to the top side, just like over here, rejection from this uptrending level, hitting a high of $4.69 and then getting rejected, coming down about 3.3% on October 1st, putting in a massive bearish engulfing candle. And, if we do merge these two candles here and let's say opening up here, coming down to here, that is effectively a falling three methods where you have a big down move followed by a few smaller candles stepping their way up, and then a bearish engulfing candle. And that suggests a continuation to the downside. We have seen that. And this day, on the 1st, we also got a secondary close below that 786 at 441. So, it really wasn't looking that good. So not only was there this bearish pattern suggesting further downside, we were getting multiple closes below this level. And then later, we did get a break with this big bearish candle on the 7th, so on Monday of this week. We saw a 5% down move, a close below 433, and now we have just been more or less consolidating. That could be a bear flag. And so 433 and 410 stand out as pretty important levels to me because they were prior lows. We are now forming lower lows. And so 433 was the low hit on June 25th. We had not seen price action below that level until October 3rd when we opened at a price of $4.30, hitting a low of $4.29. So that was starting to show some weakness then. And now we are seeing weakness again, getting our first close below $4.10 and a low of $4.03, so a lot of weakness there. But as I am looking at this, what we can see is that the RSI did dip below the 30 level, which is the oversold level, and that was on October 9th. The RSI was 28.26. And so while I do think it is good that we did bounce above, we are now back above 30 with the RSI at 34.56. I think we could reside in that oversold territory for a little while before we do move back up. So while the bounce that we saw on Thursday and the maintaining of a price above $4.10, I do think that is good. I do think that we could be seeing a little more bleeding because we have not seen a clear breakout from this downtrending channel. So I think it's really important that we keep that in mind, that we need to be seeing higher closes higher than the highs we're putting in here. And the high for today on the 11th was a price of $4.24. So I would look for a close above that level to be showing some strength. Closes below 410, 404, or 403 would be showing weakness and likely further downside. And so, I feel like price could be coming down lower because of this gap that we have here at $2.91. It is quite possible that that gap gets filled, but it is my personal opinion, looking at this from a psychological standpoint and with the thesis that AMC price will be going up. I don't think that this gap at 291 will be filled, because if it does get filled, a lot of people right now are probably eyeing it saying, I'm going to wait until 291 to get on board. But if that does not get hit, maybe it just comes down to $3 or maybe $3.50, $3.25, somewhere around there, or $3.69, have fun with it. Maybe price comes down to there and people say, okay, great, I can't wait to get on board at 291. But then once it hits 350, it starts rallying. Those people get left behind and they don't realize it until we fill this gap to the upside at 685. And so that is my thesis. My thesis is, while it is nice that we have seen a little bit of a bounce in the more recent price action, we have not broken out of the downtrend. I do think that the RSI will reside below 30 for multiple days, whereas here we only saw it below 30 for one day, and then we will start to see a rally. And so, I could see price coming down to around 350, approximately. Maybe it's 369, maybe it's 325, or maybe it goes down to $3 a share. I don't think it's coming down to 291 because then I think just above that level we will be taking off. And so I feel like 350 is kind of a safe bet right in between 410 this level and 291 here. 350 right in the middle. So I'm waiting for that, and I will look for maybe a little bit more downside after it. You never predict the bottoms exactly, and then I think we'll be rallying up to 685 or 1143 and beyond, like getting back to these daytime highs that we saw on May 14th, hitting a high during market hours of $11.88. And so I could definitely see that happening before the end of the year, perhaps in the month of October. But I do think we could still see a little bit more of a fade. But I think that it is good that we are closing above 410 now, closing the week above that level. And it's quite possible that the bottom is in. My thesis of coming down to 350 may be proven wrong. And this could be the beginning of that, seeing these two closes above 410. Now, let's just see a close above today's high, which was $4.24. So let's look for that on Monday, Tuesday, and the rest of the week next week. And then I'll do another one of these videos next Friday on the 18th after the monthly contracts for options close out. It should be a pretty exciting week. I am looking forward to it. But first, I'm looking forward to the weekend, and I hope you guys are too. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.